Hello, one and all present here. This is Amit Kumar Singh, and welcome to my class on technical analysis. So, while discussing about technical analysis and how technical analysis is different from the fundamental analysis, already I have made a separate video where I have discussed about how technical analysis is different from the fundamental analysis and what is the perspective of looking into the technical analysis. So whenever we talk about technical analysis, in the case of technical analysis, we believe that the market discount everything. And at the same time, when we are working on technical analysis, we believe that the history repeats itself. So the idea of working on technical analysis is to work on the historical data of the prices and volume and to predict the next movement. So whenever we are trying to predict the next movement in the technical analysis and based on that, what kind of trading strategy we can work on. So in technical analysis, there are a lot of tools, there are a lot of indicators and oscillators we can use to predict the next trend. So one of the indicator or oscillator which is very famous is RSI. RSI stand for Relative Strength Index. Already I have made a separate video on RSI. If you watch my playlist, you'll find already there's a video on RSI. But that video I have made primarily for the college students, those students who are in last year of their graduation or post graduation, and they're studying a subject like portfolio management or security analysis or portfolio management. So there they need to understand RSI. They need to solve the previous year question papers where the problems on RSI is being asked. So the that session was primarily for college going students. Here I'll discuss the concept of RSI, basically doing calculation on MS Excel. So you can figure out the RSI values if you go to a lot of websites. You can go to Yahoo Finance or you go to Money Control. So there you just need to click on the stock on which you want to calculate the RSI value, and already there will be software which will show you the values of RSI. Like if I go to Money Control, in case if I go to Money Control, 1 minute. So in money control, I just need to type the stock on which I want to calculate RSI. Suppose Reliance. Suppose I want to see the RSI value of Reliance. So I just go and check these data. I think everyone can easily understand. Now here I'll go to technical chart. And under technical chart, if I go, so you can see this advanced chart. So here you can see this. Here you can see the movement. So this is a line diagram of the Reliance. Okay, so talking a chart, you can draw candlestick or open high low close or line chart. Already you can watch my videos on how to work on candlestick diagram or open high low close. Already I have discussed this, how you can plot them by using historical data, the data which you can compile from the nscindia.com, and then you can draw the candlestick from them. So already there's a video on that part. Now talking about RSI value, now here I want to focus on RSI. So here if you click on RSI, normally for working on RSI, we use average of 14 days. Okay, simple moving average of 14 days we use. So now I just click on this. Now I can see this. So you can see the RSI value. You can see the RSI value. So I don't have to do anything. I just need to click on the data and I get the value. Now, the purpose of this session is to not discuss more about the interpretation of RSI, because you will get ample amount of videos on YouTube where there are a lot of trainers will discuss about what is overbought and what is oversold region, and then what is the interpretation from it. The purpose of this session is to discuss the calculation of RSI. Like if I see this on this particular date, if I see the RSI value is coming around 54.5912. So how this value came? Okay, because see, it is very important that as a trader or as a student or as an interpreter, to understand the difference between all these oscillators. So if you see RSI, there's another oscillator called MFI, money flow index. So now RSI will give you different value, money flow index will give you different value. So how RSI is different from MFI? So that is a common doubt what the student will have. Now see, I have drawn both RSI and MFI. Now you can see here on this particular date, RSI 67.2960, and MFI 72.07. So now there will be a lot of confusion in your mind that like which is better, RSI is better or which is or MFI is better. So what led to this difference in these values? So that is the purpose of my session. So in this session, I will try to be more detailed, or I try to more focused on this concept, how this value actually came. I hope you are understanding. So before I discuss that part, there's a brief introduction on RSI. So RSI is basically when we talk about RSI is basically it's an oscillator, so which gives you value between 0 to 100. So that will give you a value between 0 to 100. So any value which is less than 30. So that means that this particular stock has reached oversold region. So if you see the RSI value of any stock which is less than 30, means the stock is in oversold region. So that you can find by reading any article on RSI. And if you see the RSI value which is more than 70, that means the stock is in overbought region. So it doesn't mean that if a stock reach below 30, it doesn't mean it's a high time that you should start buying the stock. So don't live with that perception. So if the stock has reached below 30, so means you need to be patient. You need to wait for the RSI value of the stock to cross the 30 benchmark. Once it cross the 30, when it go above 30, maybe 31, 32, above 30. So above 30 to below 50, that is the region when you should start buying the stock. And if the stock has crossed the 70, then you should not start selling the stock. You should wait for the stock to pull back and cross the below 70. If it is between 70 to 50, that is the reason, that is the time when you can do short selling on the stock. So normally whenever you see RSI values is always between 0 to 100. Okay, and now how to calculate this RSI value? So we will discuss that RSI value calculation. That is the objective of my session. So basically the RSI calculation, when we talk about RSI calculation, it follows the formula call 100 minus 100 divide by 1 plus 1 plus RS. RS means relative strength. So this is the formula what we follow. So here the RS, when we talk about relative strength, so the formula for that is average gain by average loss. The formula for that is average gain by average loss. So what is average gain? What is average loss? To calculate the average gain or average loss, if you remember when I was working on money control, I used the 14-day data. So for to calculate the average gain and average loss, so the gain for the daily gains what I get or the daily losses what I got, I divided it by 14. So that I get the average gain or average loss for that day. And then by dividing average gain by average loss, I got the relative strength. Once I got the relative strength, then I found the RSI value. So now in this session, I'm going to get into the mathematical part of this, how to get that value. So for that, let's go to the website. Let go to the website like NSE India. So we'll go to the website. Let's take the historical data. So we'll go to NSE India. So if I go to NSE India, so from here I choose any stock. So this the objective of this session is just to discuss the calculation part. So I just search any stock, maybe suppose in type any stock. So once I get the stock, you go to this. Now I go to the historical data. Historical data. If you want more than 3 month data, you can click here. Here the purpose, I just want dummy data. So just click 3 days, 3 months, or you get data. Then download this. In case if you're finding difficulty in download, you just copy this. Copy this. Window R. So I got the data here. So for RSI, see how the differences come, because when we talk about MFI, money flow index, so in money flow index, we take volume, we take opening price, we take highest price, we take lowest price of the stock. But in the case of RSI, we simply take the closing price of the stock. So here the differences come. More factors if you consider, so better would be your calculation part. But in the case of RSI is one of the very generalized technique what we use in technical analysis. So in RSI, we primarily just concentrate on the closing price of the stock. Okay, so we are least bothered about other values. So let me take the date first. So I just took the date and I put the closing price of the stock. Now you can see this little bit of a this so that filter will work. So this is the closing price of Infosys. You can see the last 3 month data of Infosys. Now what I'll do for this, now just use filter, because you see these dates are newest to oldest. So for calculation part, I want the date should be oldest to newest. Oldest to newest, you do that. Once you get this, now your work is done. So what you need to do, you have to find the change. You have to find the change. Change means today closing price minus yesterday closing price. You have to find the change. Today closing price minus yesterday closing price. Okay. Once you find the change, then what is the next thing you have to find? You have to find the gain. So if the today closing price is more than yesterday closing price, then it will be gain. While if the today closing price is less than yesterday price, then it was loss. So here I'll just write if this change is greater than 0, then give me that change. Otherwise, give me 0. Now I'll talk about loss. So if this change is less than 0, okay, then give me the absolute value of that. Otherwise, give me 0. So why I use the function absolute? Because ultimately sign doesn't matter to me, because I know that if I'm writing loss, definitely it means it is negative only. So here I'm removing the negative sign because it will affect my basic mathematical calculation. Okay, then I'll find the average gain. Then I'll find my average gain. Similarly, I'll find my average loss. So for the average gain and for average loss, normally we take the simple moving average of 14 days. Just let me see this 14 days. Yeah, I got 14. Just let me reconfirm. Yeah, this is 14. I just write average. So this is simple moving average of 14 days. 1 minute. I calculated on gain or loss. This is average gain. Sorry, by mistake I calculated on loss. Similarly, what you did for gain, do for the loss. Okay, so you got the average gain, you got the average loss, you got the average gain, you got the average loss. Once you get the average gain, average loss, then find the relative strength. Relative strength. So relative strength is nothing but average gain by average loss. This is the relative strength. Once you find the relative strength, what you do, once you find the relative strength, what you do, you just need to find RSI, relative strength index. So this is relative strength index. So for that, use the formula 100 minus 100 divided by 1 plus RS. So you can see the RS value. Here I can write the function if this value is more than, if this value is more than 70, if this value is more than 70, then it is overbought, then it is overbought. While if it, while if this value is more than 50, then you should trade on this region. While if this value is less than 30, oversold. More than 50, then more than 50, then you can sell, you can do short selling. If it is L18, if it is more than 30, you should buy, and otherwise you should sell. You should buy, otherwise you can hold less than 30. So this is called nested if. So I figure out. So what you should do. or a given instance, what you should do. So this, so I just developed this strategy. What strategy I developed? What I'm telling you, if this value is more than 30, then you should buy it. While in case if it's not more than 30, if it's below 30, then you should hold it, wait for the stock to cross the benchmark 30 limit. Okay, that is the, so then if it is above 30 but below 50, okay, then you can it is above 450, below 50, sorry, if it above 30, then you should buy it. While if it is above 50 and below 70, you should do short selling on the stock. While if it is above 70, means you should not do anything. It is an overbought stage, it reached the overvalued status. Okay, while it is below 30, then it is oversold status or undervalued. So the purpose, what the value investor basically do, either it is Rakesh Jhunjhunwala or Warren Buffett, the objective of doing trading is to figure out the is to find the undervalued stock. So the undervalued stocks are those stocks which will have a RSI value less than 30. So if you find any stock having RSI value less than 30, it means it is undervalued. So you should not buy at that moment. You should wait for it so that cross the 30, should be little bit above 30, because trend reversal can happen anytime. So if it trading above 70, it doesn't mean that you should sell it, because if it above 70, it can go down little bit, again it can go up. So you have to make sure that when you draw the candlestick diagram, you have to make sure that the bottom should be below the diagram of candlestick diagram. It should be below the 70 level. So that movement, if it is below 70, means it's the time where you can start selling it. Well, if it's going above 30, means it is the time when you start buying it. So this is what I've written here. So if the stock is below 30, RSI value is below 30, means it's a time when you should be patiently watch the stock. It is an undervalued stock. And the moment it's try to go above 30, is that moment when you sell it. It can happen that the RSI value stock is less than 30, and maybe there does not happen any momentum. Maybe that stock is a low cap stock. So, and because it is a low cap stock, and then you don't find any momentum at all on the stock. So don't do any trading position when it is below 30. Wait for it to cross above 30. Okay, and when it cross above 30, if you're trading between 30 to 50, it is a time when you should buy the stock. And if it's going above 50, means then you should not do anything. Wait, it is a good time that if you have that stock, better to sell that stock. If it's going above 50, means it is a time when you should sell the stock. Either if you have not bought the stock, then you can start doing short selling. Imagine if you find suddenly if you find any stock having RSI value between 50 to 70. It is a time, if you don't have the stock, you can do short selling. Or if you have that stock, you better sell the stock. If it's going above 70, then it is overvalued. If it's getting overvalued, then what you can do, you can either wait for that moment and wait for it to go below 70. The moment it cross the below 70, that moment only you sell the stock. Right. So this is what RSI calculation is all about. So in RSI calculation, whenever we talk about RSI calculation, in RSI calculation, we only focus on the closing price of the stock. Other data like volume, opening price, highest price, lowest price, that is not the point of concern for us. So I hope you understood the RSI calculation. Now, if I want, I can plot a graph also for this. I got the date RSI value. So you can see this. This is the RSI of Infosys. So you can see this RSI value. So this is the graph. So these things you will get by using software, but mathematically how this happens, this is also important for you, because tomorrow what will happen tomorrow, when you actually do trading in the market, so you should also understand how that value is derived. You find many traders, they will tell you, okay, do this when RSI becomes this, do that when stochastic oscillator become this. So they will talk about stochastic oscillator, they'll talk about MACD, they'll talk about money flow index, but how that value, how that graph is actually coming, how it is showing you that value, particular stock is showing you that value, RSI value, how that value has came. So nobody will explain you that value. So this is the mathematical part of how this has happened. So you can see this 70. So this above 70, you can see this, you can see this above 70, you can see this below 30, you can see this limit. So I'm telling you, at this moment, if you want to buy at this moment, you buy at this moment. Okay, so if you like, now if you want to sell at this moment, this is what I'm trying to tell you. Okay, if it's going above, if it's trading above this, don't do anything. At that position, just hold. At this position, just hold, because this is overbought region. Okay, everyone. Many people, what they do, they find the crossover also. They'll find the moving average of RSI. Suppose, and so many people, what they do, they find the moving average of RSI. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so 10, 11, 12, 13, 14. So suppose 14-day moving average, suppose I'm using 1 minute. So what I did, I just took the date, 14-day moving average I found. Okay, 14-day moving average I found. Now, now you can see this. Now you can see this. So if you 14-day, this 14-day moving average is in orange color and the RSI value is in blue color. If the RSI is above, you if you have basic knowledge about moving averages, you can easily understand. So if this blue color line is above the red color line, orange color line, means it is a bullish condition. This all is a bullish condition. This all is the bullish condition. Okay, now if it below this, you can see this all are bearish condition, this all are bearish condition. You can see this region is a bearish condition. This is so if you have basic knowledge of moving average, you can understand. So this all will be the bearish region, and now this is the ideal time. You should buy the stock. You should buy the stock at this time. So you can discuss the same RSI value calculation. You can discuss the same part while using the concept of moving averages. So if you are somewhat kind of trader who want to go for long term trading, and you want to work on the lagging indicators, instead of leading indicators, a lot of leading indicators. So leading indicators give flaw signs also when you're actually trading in the market. So if you prefer lagging indicators like moving averages, they will give you much more better approximation of discussing the data. So this is about RSI, guys. So I hope you have understood from this session, you have liked this session, how this works. So this was basically about RSI. So thank you everyone. So if you like this session, don't forget to click on the like button. And if you're not subscribed to my channel, please subscribe to my channel. Thank you everyone. God bless you. Take care everyone. Bye.